Welcome back to the Insurgent Mindset. I'm Rondo Moses.
And I'm Matt Tice. This is a podcast about challenger thinking in a world shaped by disruption.
And in each episode, we explore the strategies and leadership mindsets that help businesses break from the pack and stay ahead in fast changing markets.
You'll hear conversations, case studies, and insights from leaders who are applying these mindsets to thrive in this uncertain environment.
So, subscribe to our YouTube channel or follow us on Apple Podcasts or Spotify, and check out our companion articles at insurgentsgroup.com for a summary of the takeaways from each episode. Now, let's get into today's conversation, Matt.
Yeah, who do we have
And
today, Rondo?
Yeah, today's conversation is with Rob Lawrence, who recently became the CEO of Otelier. And here's what's interesting. Rob didn't just step into this role to play it safe. He really stepped into challenge some of the fundamental assumptions about the hospitality industry and how it operates. And so, Matt, you and I talk a lot about on this podcast about the difference between incumbent thinking and insurgent thinking. And we often get the question, well, what does this actually look like when you're in charge of the organization, the CEO role? So, well, today we're going to find out. Rob is going to walk us through what he's challenging, how he's building his culture, what it really looks like to lead with an insurgent mindset when you're sitting in that CEO seat and in an industry like the hospitality industry. So, with that, welcome, Rob. It's great to have you with us on the insurgent mindset.
Thank you both for having me. I'm excited to be here and share some of my story.
Very good. Well, why don't we
Absolutely.
start there, Rob? Let's hear your story. How did you end up in this role?
Great. Well, it's a good question, Matt. I mean, if I, you know, it's always interesting to ask people to kind of reflect on their personal narrative, their and specifically their career narrative, because I think if we all went back to our like 22 and 23-year-old self, I certainly remember being 22 or 23, getting started in my career and really not having any idea what I wanted to do. And so I think the human condition is such that we sort of like craft the narrative over time and it evolves. And so with that, I'll share my narrative, which is I really started my career in consulting, similar to your background and your background, Rondo. I thought it was a very good place to start to really learn about a bunch of different businesses, a bunch of different functions, and really get that business exposure to help start to build my own acumen around what drives profitability, what drives success in organizations, et cetera, et cetera. I spent about 15 years in consulting, and then really got the itch to kind of own the work. And I think anyone who has been a consultant would understand what I mean when I say that. A lot of the advisory work we did was on behalf of others, and so we were doing great advisory work and delivering recommendations to customers, but oftentimes we weren't sticking around for the implementation. And I really I got excited about owning the decisions and owning the work. And so I made a transition into the operating world in around 2011. So it's been 15 years really that I've been operating in software businesses. I started my first kind of functional role was running corporate development and strategic partnerships at a corporate training and education business. I then spent 7 years in a larger capacity around growth strategy and driving a growth agenda for a large publicly traded software business called LogMeIn that we eventually took private. I led the take private of that business. And then most recently, before my stop here at Otelier, I was the COO of a data capture SaaS business, so a horizontal SaaS application that was in the think about it as it was a low code form building product that also had document generation and digital signature capabilities. So workflow automation, if you will. How did I become a CEO? It's very interesting. Like when I was thinking about what I wanted to do next, um, I was having discussions with companies about GM roles, another COO role where I run all of go-to-market and own the customer journey. I was sticking in SaaS and in software because I've enjoyed my time in software. I got a couple inbounds for CEO roles, and I decided to just take them and kind of throw my hat in the ring. And I got into these conversations, and the questions that I was being asked, like the answers just came naturally to me. I was like, huh, these, like every question I was getting, and I hope none of my board members are listening today. But no, in all seriousness, the questions I was getting, I was like realizing like I had really good answers for them, like, and they were coming really quickly. And I started to think to myself, like, maybe this is a role I could be decent at. I really enjoyed my executive roles before this, but had never, there was never like an aspiration, like I have to be CEO to feel like my career has been fulfilled. But I started having these conversations, and the stars just aligned with the team here at Otelier, and specifically the board. I had a prior relationship with the board here, and so it's one of these situations like networking. You come in for a cup of coffee, you don't know where it's going to lead, and you just happen to be in the right place at the right time where there was an opportunity. So it has been a great year of learning. Being a first-time CEO, it was very daunting in the beginning, but it has been a great year.
Hey, Rob, in the press release announcing you as the CEO, you mentioned that you were honored to be joining Otelier at a pivotal time. What was that pivotal point, and why was that? What made that moment right for you to step into that CEO role?
Yeah, well, a couple things. I think that the company has been on a bit of a journey. So and this is there's good, like I should provide a little bit of context around the industry, around hospitality in general, because I think the context will help me answer this question. So hospitality as a vertical, as an industry vertical, I would call them a laggard in terms of like technology adoption. And so when you look at the hospitality tech landscape today, it is littered with everything from mainframe green screen systems that Marriott are still using to take reservations in their like central reservation system. I'm not kidding you, 35-year-old technology. Everything from that to the most modern like SaaS product built on, modern cloud architecture and everything in between. And none of these systems talk to one another. So I came to this business right after the business had been acquired in 2021, and then subsequently, again, this sort of consolidation investment thesis was like we have a platform. Let's go add to this platform some adjacent capabilities and build a portfolio of tools and products that we can sell into large hotel operators and resorts to drive better decision making in property for the purposes of guest experience or operational efficiency. So very quickly after acquiring this business, the private equity owner who acquired it, they did four acquisitions. They did four acquisitions in 24 months. And so when I arrived at the company, Otelier was basically this, call it 20 to $25 million business, but it really wasn't a $25 million business. It was the product of like five break-even startups that had been brought together with a management team on top of it. So it was an interesting time. There was clearly a good amount of work to do to drive integration and to kind of restructure the business. Because the other thing that has the other reason the timing was really good is over the course of the last 18 months, we have been rebuilding our product portfolio. And we are now in GA for our two kind of flagship products. One is a business intelligence platform, and one is a planning and budgeting tool that is purpose-built for hospitality. And these products represent a significant leap forward frankly, in differentiation relative to our competition, because again, hospitality tech is a laggard. And we have a couple competitors that we compete with directly. They haven't updated their tech in 10 years, in 15 years. So I feel like the moment is now for us to inflect this business and continue to disrupt.
Nice word, Rob. Inflect. I like that. So the laggard really sort of sticks with us. So you've given us a corner of the hospitality kind of market dynamic. Can you sort of paint us a picture of what's happening more broadly in hotel hospitality? What's changing? Who's challenging? How's that market dynamic shifting? I assume it's a laggard because the industry is a bit slow to move, but maybe not. Let's hear your thoughts on that.
I think that's a little bit of it. When you think about, yeah, it's just it has been very slow to move. I mean, I guess if we just take a step back and talk about what's happening, and when we talk about hospitality, we're really talking about hotels and resorts a little bit. We do have like some ski resorts that are customers. We don't really do much in restaurant, but our ICP, like our ICP, are these large multi-property operators. So think
Hmm.
about on a business that owns all the operating contracts for a portfolio of hotels. And those hotels actually might be owned by different asset owners, like the people who actually own the buildings. And these operating companies just own the operating contracts for the hotels. And so let me explain the customer problem we're solving. So in any portfolio of hotels, the way these portfolios come together is they start regionally and you kind of build over time, right? Because you do get economies of scale from things like having a regional manager that can cover, five or seven hotels in a geo. And so you typically will, if you're building a business, and I have a good friend who owns 150 hotels at this point. He started regionally and started acquiring like over time. And while you're doing that, you're basically acquiring hotels that are, essentially you're flag agnostic. And what that means is you're acquiring Marriott franchised hotels, you're acquiring Hyatt hotels, you're acquiring Hilton hotels. And these
Hmm.
could be full service hotels, or they could be things like Courtyard by Marriott or Hilton Garden Inn or Residence Inn, right? So you have all these different brands. And so as franchisees, you are required to run certain software systems if you are a Marriott franchise property. If you are a Hyatt franchise property, you run different software systems. Okay. And so now pull back up, you have a portfolio of 100 hotels. The hotel business is a daily business. It is very important that you understand what perform as the general manager of a property. It is very important that you have a very good understanding of what happened in your property at 9 a.m. from what happened the day before. So you need to know by 9 a.m. everything that happened in your property the day before. What was occupancy? What was RevPAR? How many toilets were broken so we couldn't sell those rooms? How many elevators were down, et cetera, et cetera. In order to get a 360-degree view of, say, all 100 of your hotels, and be able to normalize all that data because they're different systems that don't talk to one another, you need to work with a data aggregator like us. So we are basically a data aggregator. We are ingesting data from hundreds of different systems, normalizing that data and processing it back to our customers, who then can use our app layer to drive like business intelligence, insights, or greater automation in the business. And the reason that I say all of that, I think it's like important context, is because let's talk about what's happening in the hospitality industry today. I would describe it as a K curve. It is the tale of two cities. The luxury category, similar to what is happening in society, the luxury category right now is on fire. It is incredibly healthy. It's similar to like, any sort of luxury category right now has been held up and is very resilient. The large middle swath of the market. So again, all of these select service hotels. There was the most recent forecast from CoStar, which is one of the kind of industry data players. They just came out with their latest forecast for the rest of this year in 2026. And the forecast is not great for like the select service category, which is the large swath, the large category of these multi-property operators. These sort of select service and extended stay hotels, they represent the vast majority of hotel properties in America. And we are
Hmm.
largely a North American business. So it is a tale of two cities. We have our, you know, our- we and we, you know, we play in the resort space, and we have resorts like Sea Island, Georgia, Pebble Beach, Pinehurst, Kiowa. We have those types of customers, those types of resorts as customers, those great customers. Those property, those all of those customers are doing really well. It's our HMGs, our hotel management groups that are struggling. And so it's a great opportunity for a software provider that can help you drive operational efficiency in your business um, through things like automation. We have tooling that can basically offset like many headcount in a relatively short amount of time. So in austere times, people look to technology, and I think we saw that this year because despite this really choppy market, we had our best sales quarter in 9 months. Sorry, in 9 quarters in Q3 of this year. And that was in this very sort of uncertain, choppy market. And I think we know why the market is the way it is. I mean, there's a lot of uncertainty. It's been a very eventful year geopolitically.
Yeah.
When you think about Liberation Day and just all the back and forth on tariffs and trade wars and everything else that we've all been dealing with, I think everybody like just as human beings that are walking around in North America, there's a bit of uncertainty around what's happening day to day. And as business leaders and business decision makers, we're bringing that uncertainty to work with us every day, and it's showing up in how businesses are making decisions. So we're seeing that, but we see this as an opportunity to get more commercial traction, not less.
So, Rob, then that's
Yeah.
a great characterization of the hotel and hospitality space. So challenging times, so obviously opportunity in that challenge. Um, as a SaaS guy, right? Give us a sense then, not just in hospitality, but how is the SaaS landscape changing, right? And give us a primer, if you will, on SaaS 5 years ago, and then maybe SaaS 5 years from now, and help us understand how that dynamic is changing.
I mean, how much time do you have, Matt? Um,
All the time in the world for you, Rob, but you know
yeah,
what I mean? I'm sure you've learned in your first year as the CEO, you got to learn to be punchy with these questions.
absolutely. Yeah. So a couple things here. Let's talk about SaaS 5 years ago versus today. 5 years ago, we were on this like pretty steep part of the penetration curve with SaaS. And healthy growth 5 years ago would have been basically 2020, 2021.
Mhm.
Basically the peak of the Bessemer index was in November of 2021. Like valuations just continued to rise because basically SaaS was taking over essentially every industry vertical. There's a SaaS solution for every industry vertical that's out there. Um, I would say through 2021, 2022. And then, inflation skyrockets and interest rates start going up, and all of a sudden, like valuations crater. And so over the last 5 years, it's been a little bit of a reckoning on SaaS. There are still, very, durable businesses that still command high multiples. But there was a full reset on valuation in SaaS, or from 2021 to say 2023. And I'd say the industry is still sort of recovering from that sort of reset. Part of it is, this is my opinion, so this is just what I think. I think there are too many software businesses out there. Like I think that part of the reason that the conditions that we're seeing, and this is before, by the way, we talk about AI in a minute. I just think there are too many software businesses out there. There are too many software businesses that are doing the same exact thing, competing for the same customers. And so I
Mm.
just think before we even start talking about AI, there was probably a reckoning to be had about like just too many businesses trying to do the same thing. Now, what has happened over the last year with AI is like we're obviously in we are all in unprecedented times. And I wish I
We
could say
always,
that I'm sorry.
aren't we always?
Yeah, exactly. But this feels a little different though, because when you think about the speed at which things are changing due to AI, like we are doubling compute power globally every 6 months now. We've basically tripled we've tripled what Moore's law stated. And Moore's law was this convention that everybody ascribed to for a generation. Like for the last 20 years, it's been all about Moore's law. Moore's law is out the window. It's not out the window by an order of magnitude. It's out the window by like three orders of magnitude. And
Mm.
we're only accelerating. Um, and so you know, as a SaaS CEO, I would tell you that every SaaS CEO should be terrified of what AI could do to their business. And if you are not going to get on the bus and you're not going to embrace this trend, you are going to be disintermediated, and you might go away altogether. Let me just give you an example. Take Salesforce, for example. You don't need Salesforce anymore. You can get all of your go-to-market prompts right out of ChatGPT. You can build your own personal CRM today. You don't there will be no need for like the core Salesforce business at some point in the near future. Think about the size of Salesforce. Like for a company like that to potentially get disintermediated. Now, obviously there are really smart people that work at Salesforce. They're doing everything they can to continue to extend their business. And if you go into the transcripts, like they have very much transitioned to this platform business and they are acquiring. Um, I think that this is a bigger risk for horizontally oriented businesses that are just kind of more generic. I think as a vertically oriented business, so we're vertically oriented for hospitality. I think we have a little bit of like we have a little bit more buffer or time to get our act together. But make no mistake about it, the AI, this sort of the arrival of AI and this like uptake, it is it is just happening so quickly around us, and like things are changing like every 3 months.
So Rob, how does that then,
Interesting.
how does the AI then in the SaaS environment fundamentally change the business model of a SaaS business? Right. I understand the product side that you just described, but
Yeah.
like if you could get granular for a second and kind of describe what that might look like, it'd be helpful.
Well, I'll give you one. I'll give you, and this I don't have the data. I don't have the source because I read a bunch of things, but I read an article a couple weeks ago, and it was basically an article about what happened to this generation of kids that 15 years ago we said in kindergarten you need to start coding because coding is the
Hmm.
future, right?
Hmm.
And so it was basically an article about basically following the journey of all these kids who like started coding when they were in kindergarten or whatever. These kids are now graduating from college. They went on to college. They were computer science majors. They're graduating from college, and guess what? There are no jobs. And if you look at the unemployment rate amongst recent college grads, and you slice it by major, by field of study, computer science majors have the highest unemployment rate of any college major of recent college grads. Now, the other thing that I've read in another article around the same time a couple weeks ago is when you look when you sort of like cross-tab like ADP payroll data, and we're obviously not getting jobs reports well, hopefully we'll start getting them again now that the government's reopened. But there is an estimate that roughly anywhere between 10 and 15% of knowledge economy jobs, like entry-level knowledge economy jobs, have just vaporized. They've disappeared. And so kids coming out of college, there are literally 10 to 15% fewer entry-level jobs available for college graduates. So that probably over indexes in technology, because I'll tell you what's happening in our business. You don't the need to have entry level, like frontline software engineers. You still need some, but you don't need nearly as many because AI is writing the vast majority of code today. And it's not only writing code, but it's AI is being used for QA, AI is being used for testing. And the adoption of these tools, it's like I will tell you, like in our tech, in our and we're a pretty small business, so we can't afford to build like these huge models or anything like that. But even in our little small business, just in the last 3 months, the adoption rate of all these AI tools is like people are like it's going up every day, and we're
Mhm.
doing more and more in our production environment every day, leveraging these productivity tools. And I was talking to one of our engineering leaders last week, and he basically said like we're going to start to see real productivity gains with fewer people, upwards of like a 30%. Like we should any business should be able to get 30 to 40% productivity gains by just adopting AI tooling in their engineering environment. Like that's like a baseline. That's a baseline that you should shoot for. So it has really profound impacts on how the industry is structured. It has an impact on your business model because you might need fewer people. We're not that far away from like people like the one person company that is like you have a sales function, you have an engineering function, you have a product function. It's all just one person. Like
Mhm.
we're not that far away from that because these models and these agentic capabilities are so powerful at this point.
Rob, one more
It's
question.
interesting.
Sorry, Rondo. I'm
That's
curious
okay.
about this. So, if you extrapolate that, Rob, a lot of what you talked about is supply side in terms of being able to, deliver products and manage the organization. But in the SaaS environment, if you extrapolate that into sort of a almost like a tokenization model where the AI prompt just does everything that you've created software to do, to you mentioned earlier, aggregating all this data, converting that data into insights for your customers. I could imagine what you just described for Salesforce applying to virtually any business where all that software layer largely becomes irrelevant and it just the prompt self-organizes the data in the background. Is that a future that you're planning for?
It is. I would say that absolutely, that's a great extrapolation, and I think you're absolutely right. I think there's nuance in it, obviously, and so for a vertically oriented business like ours, like I absolute like our secret sauce is our integrations. It's also our kryptonite because if you think about it, we maintain about 400 integrations to different systems. It's about
Mm.
400 integrations for about 250 different systems because we have multiple ways of integrating with some of our core systems. So, um, at some point, AI is going to be able to actually build those integrations, whether it's through MPC or some other protocol that has not been developed yet. These things are coming online so quickly. We are not far away from AI being able to not only build these integrations, but then monitor them. And a lot of the work that we do, the reason it's our kryptonite is we only can control what we can control. There's a lot of like, last mile in third-party vendors where like a third-party vendor rolls out like an update to an API, it breaks an integration, and all of a sudden we have a customer that's not seeing data in the morning. Where did the break happen in the line? Is it our fault? Is it the client's fault? Is it the third party vendor's fault? Like this is sort of a use case that we've got to deal with all the time. AI can solve like problems like that really well. The thing that AI is not going to be able to do is like, the data model that we've built and like what matters to hospitality executives today, it will be really hard to replicate that with AI anytime pretty soon because it's like fairly bespoke and how we get the data is somewhat bespoke as well. So the data feeds like are the one thing that is probably like the not the is the differentiator is the reason why like a business like ours wouldn't get like completely disintermediated, if that
Interesting.
makes sense.
It
Yeah.
does.
So Rob, it sounds like there's a lot of disruption happening in the industry, not technology in particular, but that there are other factors that are contributing to disruption in your industry as well, the uncertainty in economy in the US, et cetera. So as the CEO, and you think about your vision for the company looking ahead, just paint a picture when you think about 3 to 5 years from now. What's going to be fundamentally different about Atelier, would you say, in the next 3 to 5 years?
Well, in the next 3 to 5 years, I would expect us to be a market leader in business intelligence across large and medium multi-property operators. So these again, these large hotel management groups that I was talking about, as well as small and medium luxury brands. So we also have Mandarin Oriental is one of our largest customers. We power all of their BI globally in their 46 properties.
Mm,
Lowe's Hotels is a big customer of ours. And then other brands like Raffles or you name the luxury brand, like those are good prospects for us, good customers for us. I expect us to be a leader in business intelligence. I expect us to have a a very strong agentic, and not even in 5 years. In 5 years is basically like that's like an eternity. In
right,
two
right.
years, I would expect us to have like a highly differentiated agentic front end, like advanced analytics AI model to be able to conversationally query your data in a way that will return insights, but not only return insights, will also prompt you to ask like what next question you should be asking based on the question that you just asked to get to higher
Mhm.
order insights. And whether that's to drive like a better decision about how to provide for a guest experience in property or or it's to to drive some optimization, who knows. But having that type of actual AI in product as opposed to just leveraging AI in our production environment to be more productive. So we think about it in a couple different ways, like how we apply AI. One is in our production environment for to just drive better productivity, to have a more efficient business. The other is how does AI actually render, what are we gonna render in the product? What are we gonna build in the product to be like a differentiator relative to competition? And that is a huge that is a lever and it is something that we're pretty focused on right now.
It's really interesting that you say that because a lot of the research has shown that companies that have been using AI have not really gotten the ROI, the return from AI yet. And I think a lot of it is because they've only been thinking about it from the efficiency point of view in terms of savings, as opposed to you're talking explicitly about productivity, right? And
Yeah.
that's a different way to think about it.
Yes, and it absolutely is. And again, you can read these statistics. Like a couple months ago, I saw an article. Basically, 90% of AI projects that companies start fail. Why
Yeah.
is that? Well, number one, they're starting in the wrong place. They're not starting with, well, what use cases are we trying to solve? They're starting with like, how do we get savings? It's just the wrong question to be asking because then all of a sudden you're like, you're running around with a sledgehammer trying to chase nails, and it doesn't like
Yeah.
it you don't it doesn't work. So you've got
Yeah.
to start with like use cases, like where are we experiencing pain, and what use cases could AI be applied to like decrease the pain? I mean, it's really like where your starting point is. So and again, like I've been to a couple AI seminars. What I'm sharing with you is like what I've osmosed over the last 6 months, and just I probably this is a big top. AI in general is a big topic for me as one of the CEOs of in the portfolio. Our investors are really asking all the CEOs to have an AI strategy and be thinking about it. So I'd say this is anywhere from 10 to 15% of my mind share on any given day.
Hmm.
Interesting. And you inherited a team, you inherited a culture last year when you joined the company. How do you challenge the people inside the organization to adopt the mindset that's needed to push in this direction? Because it's a different mindset, right? Different pace, way of thinking.
Yeah, I mean, it absolutely is. And I mean, my goal from a culture, like a cultural standpoint in this business, like I am focused on, so first of all, we are a virtual remote company. As Matt knows, I got to visit with Matt in Sydney because we have an engineering team in Australia. So it was great to see Matt in the flesh after 20 years. But we're otherwise virtual remote. We have an office in India, office in Sri Lanka. Everybody in North America is distributed. So I start with that because it is hard to drive culture change in a remote environment. It requires very deliberate interactions on what we're doing now, like on Zoom. And it is exhausting because you have to pour your heart and soul into this digital modality to try and drive like the change you're looking for. But my what I talk about building a winning culture of accountability and high employee engagement. And those are the things that matter to me, especially being in a remote environment where everybody's working from home. How can we drive better engagement with our employees? Whether it's the work that we're giving to them, when and how we are getting together in person. And like, for example, I try and get my team together 5, 6 times a year. It's really important. Like, again, I was just getting to know all of these people. It's important to build trust. And like, you spend more time with people you work with than you spend with your family members. So it's nice to build trust with them and understand where you have common things in common and where you have differences, and being able to work through all of that is like I think really important for healthy dynamics in a leadership team. So we've spent a lot of time together investing in ourselves and the like. So it's been great. There's still more we can do. It's a matter of resources and time.
So on that, Rob, sort of as a 20, $30 million business, um, in describing the culture of engagement and accountability, how do you create the, if you will, the challenger mindset as a small business to punch up into these these really established markets? Like, how do you get that sort of agility and, the momentum to achieve that?
Yes, it's a great question. So, recognition, like people like kind of dismiss giving recognition in like in a company environment. I'm not saying everybody, but like it's pretty easy to be dismissive, like, oh, we're having an all hands. Let's just report out on, the results.
Mm.
As opposed to, well, yeah, let's definitely like we want to let everybody know how we're doing. But let's actually take, a chunk of time, whether it's 20 minutes, however long it is, and let's celebrate the wins that we've had since our last all hands. And by the way, it's not just sales wins. It's not just product wins, but it's anything in the business, whether it's like somebody in the G&A org, or like in finance, like they figured out an easier way to close the books and it saves us 5 days, or it's a product feature, or an engineer figured out like this really interesting script to, you know, make our QA process like way more efficient, whatever it is, celebrate the wins in front of the whole company. And it's just celebrating the wins and winning. It's infectious. And it's what gets people want to be at a place that is winning versus
Hmm.
losing. And so you celebrate the wins like heck, and you scream from the rooftops about them, and you recognize the people that have done it. It sounds so basic, but people just miss the opportunity. Not only is it so basic, but it is, relatively speaking, an incredibly low lift. It's just
Hmm.
like take the extra hour of preparation for an all hands and brainstorm like, okay, what are we like my team? We'll take an hour. Like, okay, who do we want to celebrate? Like a lot of good stuff happening in the organization. Who do we want to celebrate this month?
Hmm.
And then depending on where in the organization it is, like, okay, it's somebody in engineering. All right, Shams, go build the slide. And then we celebrate these teams or these people, and people love it, and they want to be recognized again. It's a really good way to drive employee engagement.
They feel valued because you've
Yes.
acknowledged what their value to
They
the
feel
organization.
valued. They feel like they've been listened to. I mean,
Hmm.
at the end of the day, people care about a couple things. Like really, like when you break it down, what drives happiness at work? Number one, you feel valued. Number two, you feel like people listen to you. And number three, that you're paid fairly. Not overpaid, but also not underpaid. Overpaying people doesn't help. In
Hmm.
fact, it can cause like weird cognitive dissonance because it can stress people out. But again, those three things, like if you solve that, like generally speaking, you have a good formula.
Who knew that creating a winning culture creates winners, right? So,
Yeah,
Right.
I know. I know.
right. Okay. So, Rob, then in summary, we're going to run out of time here, but your first year, you've shared with us some insights about that. Like, give us a summary of your sort of 3 to 5 top insights, and frame that in terms of messages for others who might be exceeding in this type of role.
Yeah. Yeah. So I'll share it as part of like say the learnings from the first year.
Mhm.
I mean that's really what you're asking, I
Sure.
think.
Yep.
And reflections, because it has been a year, so this is a good time to reflect. So especially in my prior two roles at FormStack, which was the last company I was at, and prior to that at LogMeIn, which was a lot much larger business, I sat right next to the CEO. I was effectively a number two. And I watched them work. I was in the room with them a lot of the time. And to me, it was like it kind of looked like a different job, but it's like, oh, it's pretty similar to what I do. It's just like, they're just but but when you actually step into that seat, it is just a different feeling. And it is immediate that you have a different sensation. There is a loneliness aspect to it, and there is like a heaviness aspect to it that until you're actually sitting in the seat, you can't appreciate. And it was like maybe my second day in the job, I was like, whoa. And it was like, and for a moment, it was like a little overwhelming. I got my wits about me. And so that's the first learning. There is a loneliness aspect to this job. And you have to make an effort to find your mentors, find the people that are going to keep you sane, find the person that you're going to go blow off steam with, because I will tell you, my wife does not want to be that person. She does not want me coming home every night and unloading on her. She'll listen. She's a great partner and she will listen to me, but it's probably not healthy for our long-term relationship for her to play that role. So you got to find your people. That would be point number one. Point number two, I have made some changes to the business, like the leadership team that I started with, it looks very different than the leadership team I'm about to have. We've had a change in CTO, a change in Chief Product Officer, a change in Chief Customer Officer, and a change in CFO. So lots of change to the senior team, but part of that was like we got to get the right people in the right seats. And I didn't think we had all the right people in the right seats when I got here. One thing that I would, potentially, I wish I had moved a little faster. I wish I had moved with re just more agility out of the gates. I think it took too long for me to make the call on a couple things. It it hasn't been catastrophic, but I just, if I had it back, like, could we have like gotten to some of the things we were
Opportunity
doing like
cost.
2 months earlier? Absolutely.
Yeah.
Like move faster. Um, Maybe one final one, and then maybe if there's follow-on questions. I'd say the thing that, in addition to like the loneliness factor, I've gotten the question a couple times, like, so really, what's the job? Like boil it all down. I'm like, okay, well, if I think about my normal day, and like I will wake up in the morning and I'll have a good sense of what's in front of me because I tend to look at my calendar every day, but then before I go to bed. I expect the day to go a certain way, but it doesn't necessarily it rarely actually goes the way it's supposed to go because like things are just always happening. And so the way that I describe the job, like when you break it down, all day I traffic in hard decisions and bad news, right?
Mm.
Because all the easy decisions are made by my team. Like I don't have to get involved with them. So the only thing that gets to my desk are the really like the basically the decisions where there's not a good answer. Um, and then, bad news, good news fast, bad news faster. And I've hammered that into my team because I live in mortal fear of getting a call from a board member about something that they're telling me about my business. And
Mm.
that's not a good place to be. So there were a couple, snafus along in the first couple months where I really had to emphasize with my team, like bad news fast, and you have to dumb it down for me. Don't assume that I can just osmose what you're saying. I need to understand the implications. So that took a little time for the team to kind of get there, but now they're really good about giving me bad news really fast, which is good.
Right.
Well, it's better
That's
than no bad news, I suppose. That's having that uh, environment of not having the fear to be able to share that, I think is
right.
quite important, right? So, and the fear, the opportunity to take risks as you're growing and things like that. So, I guess my only follow-on question is, I didn't hear that in terms of the culture that you were kind of describing, but it's sort of implied in what you just described with bad news is like bad news fast sort of implies that you'll be rewarded for sharing that news fast, but maybe not so much if it gets to me before when that finally decants. You know what I
Yeah,
mean?
like yeah, it's a really good point, and I do think it's actually just like let me like take that a little further because it is about like the other thing that I'm promoting here is this concept of like learn fast, fail fast. So this like
Mm,
test and learn. I want, it's okay to fail. Like I actually like we should celebrate failures as much as we celebrate successes. And I say this to the team and I promote it all the time because it's just about learning. Like you're learning fast and like failure is great. It's like, okay, well, we tried this, it didn't work. Good to know. Let's try this. And it's just like you go from one thing to the next. So we have to be a place where if you have bad news for me, I can't freak out unless it's like unless there's like gross negligence involved or like somebody just like, did something boneheaded. But if you're like putting your neck out there and you want to test something and it fails, like, well, as long as there's learning from it, like, let's celebrate it and move on and build on it. And so that is part of this like culture of like this winning culture. Like, it's okay to fail. Let's learn from it and be agile and pivot and move. Like that's how we're gonna become a better business. That's how we're all gonna become better employees.
So, Rob, before we wrap up, we always ask our guests to give our audience some advice. And what's one advice you would give someone who wants to lead like an insurgent, but they don't have the CEO title? Like, what advice would you give them?
I would what I would suggest if these are individuals maybe in an organization because I did this a little bit at my last company where I was the number two and there was actually and I didn't share this but there was a leadership change at my last company and I raised my hand for the role. I'd only been in the business for about a year and it was a much bigger business than the one I'm currently at. And the board just didn't think I was ready. And so but what I did in that year, like over the course of the next year, we ended up bringing in another leader. Is I just, I had a vision of how I would run this business and what the vision for this company should be. Anyone who is aspiring to be a CEO who isn't today, I would say wherever you are working, go through that exercise. What if you were the CEO tomorrow? What would you do in the business? And just like go through that thought exercise. And at the end of the day, this job is about the things that you own as a CEO. You own hiring and firing the management team. You own communication. You own company strategy, and you got to manage the board. Those are the four things that those are the four things that CEO like if you really break it all down. And
Mhm.
so
Hmm.
communication, strategy, vision, like that's where you really need to be.
Awesome.
Perfect. I think that's great
Awesome.
advice, Rob. Thank you so much. It's a pleasure to see you on the podcast, and we'll look forward to tracking your not 5 years. I guess we'll check in a year and see how it's going. But
Right.
Yeah,
it's
1 year is the new five in AI speak.
there
So
you go.
yes.
So big,
Absolutely.
big challenges, big opportunities. So terrific. All right, Rondo. So let's do the outro, right? So
Yes. Yes. Thank you,
over to
Rob. This
you.
was great. Really
Thank you
appreciate you
both.
sharing your thinking with us today.
Thank you both. Take care.
Wow, that was a really interesting conversation with Rob Lawrence. He had a lot to share about not only his role as a new CEO, but just the hospitality industry in general and how the SaaS, I would say, model is evolving and the impact of AI on that business model. So it was very, very interesting for me.
Yeah, I think the idea that these SaaS businesses are, I think there were two main themes. One is that there's going to be a great crunch of software businesses sort of consolidating or just
Hmm.
disappearing. And I think the real concern is this notion of, again, that extrapolation of AI sort of potentially um, makes many of these companies obsolete reasonably quickly. So,
Yeah,
and we've been talking a lot about productivity. I really like that Rob picked up on that idea that, it's kind of not the denominator, it's the numerator that you've got to focus on and really get, apply this technology where there's leverage to create value for customers. So, to
yeah.
me, that was spot on.
Yeah, his point that companies are starting in the wrong place, like really understanding what are the use cases, whether they're pain points or opportunities, and figuring out how AI can help you with that is really the best way to think about how to, go about your AI strategy.
Hmm. I also like that, just hearing kind of very genuine reflection on, you know, kind of what I wish I'd have done better in the first year. Especially that notion of um, that little bit of regret about not making decisions faster. I don't think many
Hmm.
CEOs will, kind of really authentically name that as an issue. And the loneliness one too is, I think, kind of
Right.
that moment of vulnerability there is like, it is difficult to be in this role. And, you do have to seek that sort of support from your network, or else you find yourself suffocating. So I thought
Yeah.
that was really, really good too.
Yeah, I've actually heard that from a couple of other newly minted CEOs about how lonely the role can be. And they did exactly what Rob is doing, reaching out to other CEOs, mentors that can sort of give them some guidance during that period. But yeah, that is apparently is because, people don't want to approach you unless they have something really important to say, or they don't want to bring problems to you. So you have to be more deliberate and intentional about reaching out to them and connecting with them and showing them that your door is open.
Yeah, absolutely. And I think, the idea of turning over the team is really interesting. It's sort of like be interesting to check back in with Rob 5 years from now, maybe perhaps as he moves into his next role to see whether he retains more of those people. I think my observation over sort of 30 years in working in the C-suite is that um, younger, newly minted CEOs tend to be much more aggressive in terms of turning over the team. And
Hmm.
I wonder, and I think for a fast-moving business, you do have to have the right people on the bus. There's no doubt about that. And kind of having that refresh rate in the business, including the CEO, is really important. But yeah, I just wonder how that will evolve too. I think there's a lot of interesting territory here. And obviously we wish Rob the best, but it's a challenging role in a challenger environment where there's a lot of change and disruption. So I think that should bring lots of opportunities to Otelier and to Rob.
Yeah, yeah, yeah. That's great.
Very good. Okay, well, let's wrap up then, Rondo, and I guess we can encourage our listeners again to come find us on Apple Podcasts and Spotify. If you have the time, see us on YouTube. And if you're really time short, come to insurgentsgroup.com and you can listen to the blog review of this podcast and all of our other ones in short, digestible reading form. So again, Rondo, great one. We'll look forward to seeing you next time around.
Likewise, and thank our audience for listening and stay insurgent.
All right. All the best.